and thanks for joining us at EMII.com. I'm Caitlin Sisney with your hedge fund headlines. Today is Friday, April 4th, 2008. Och-Ziff-Capital Management ran out of steam in the first quarter, with all four of its hedge funds settling in negative territory, reports Hedge Fund Daily. According to the firm's filing with the SEC, the Oz Master Fund, which accounts for more than 50% of the hedge fund's total $32.8 billion in assets, lost negative 0.69% in March for a year-to-date total of negative 0.8%. The worst of the quartet was the Oz Asia Master Fund, which deepened its so-so losses in the first 2 months of the year by finishing March down 2.48% for a year-to-date of negative 2.58%. Staying with hedge fund news, uncertain which way the market would go, stock hedge funds played it safe and kept some $90 billion in cash in January, according to data from Merrill Lynch. Hedge Fund Daily reports that figure declined to a shade under $65 billion in February, but it is still at levels reminiscent of the last time hedge funds left so much cash on the sidelines. That was in 2004, when through the first 10 months of the year, the S&P 500 inched up less than 2%. Unlike 2004, when the problem was stagnancy, today it's volatility that has hedge funds finding comfort in cash. And in other hedge fund news, high yield is the only hedge fund strategy that earned a negative outlook from HSBC Alternative Investment portfolio manager Tim Gascoigne as the firm surveyed the industry this year, reports Hedge Fund Daily. Gascoigne noted, quote, credit markets remain under high stress levels, largely felt as cash markets continue to weaken, with poor bid levels from both bank proprietary desks and investors. The portfolio manager gave positive, neutral, positive positions for convertible arbitrage, fixed income arbitrage, macro, event-driven multi-strategy, and statistical arbitrage, with neutral ratings for long-short equity, equity market neutral, and merger arbitrage. And in other hedge fund news in Asia, private equity and venture capital investment in New Zealand plunged 91% in the last 6 months of 2007 as a result of the global credit crunch, reports Hedge Fund Daily. Still, PE and VC ended the year with $1.23 billion, besting 2006 $1.2 billion. According to Ernst & Young's annual New Zealand Private Equity and Venture Capital Monitor, the 2007 figure was accomplished through one-third fewer deals than the year before. And that rounds out today's hedge fund headlines. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our hedge funds channel online and read the latest developments.